Good morning and welcome to our daily crypto news podcast. Today, we're diving into a market rebound led by XRP, the latest CPI report, and the growing mindshare of DeFi. We'll be discussing the biggest market movers, analyzing key economic indicators, and exploring the themes of decentralization and DeFi adoption.
That's right. Let's start with the markets. We're seeing a rebound across the board, with XRP leading the charge at 8.34% growth over the past 24 hours. Bitcoin is up 2.11% and Ethereum is up 3.52%. Other notable movers include Solana at 5.98% and Dogecoin at 3.87%.
Those are some impressive gains, especially for XRP. It's worth noting that XRP has been on a tear lately, with many analysts attributing its growth to the ongoing developments in the Ripple versus SEC case.
That's true. The case has been a major factor in XRP's price movements, and it will be interesting to see how it continues to play out. Meanwhile, the latest CPI report has been released, and the numbers are in line with expectations. The report shows a slight decrease in inflation, which could be a positive sign for the markets.
Absolutely. The CPI report is always closely watched, and a decrease in inflation could signal a shift in the economic landscape. We'll be diving deeper into the implications of this report later in the episode.
Moving on to decentralization, we have an interesting article from Pablo Larguilla titled, "How to Ensure Blockchains Are Really Decentralized." In it, he argues that decentralization is fundamental to blockchain technology, but the industry may not be focused on the right incentives to drive decentralization.
That's a fascinating topic. Decentralization is often touted as a key benefit of blockchain technology, but it's not always clear how decentralized these systems truly are. We'll be exploring this theme throughout the episode, including a deeper dive into the article and its implications for the industry.
One of the points Larguilla makes is that decentralization offers resilience and resistance to censorship, but it's not always clear how to achieve true decentralization. He argues that the industry needs to focus on the right incentives to drive decentralization rather than just paying lip service to the concept.
That's a great point. Incentives play a huge role in shaping the behavior of actors in the blockchain space. If the incentives are aligned with decentralization, we're more likely to see truly decentralized systems emerge.
And that's where DeFi comes in. We're seeing a growing mindshare of DeFi, with more and more users turning to decentralized finance solutions. This could be a major driver of decentralization in the industry, as users seek out alternatives to traditional centralized systems.
That's a great point. DeFi has the potential to be a major force for decentralization, and we'll be exploring this theme in more depth later in the episode. For now, let's take a closer look at the CPI report and its implications for the markets.
As we were just discussing, Europe is indeed becoming a hub for cryptocurrency adoption. Germany's Boerse Stuttgart is the perfect example of this. They just announced that crypto accounts for a whopping 25% of their revenue, with trading volume almost tripling in 2024.
That's incredible. We've seen traditional exchanges expanding into crypto, but 25% is a significant chunk. I think it's worth noting that they've been building their crypto offerings since 2019, and it's clearly paying off. They now have over 1 million crypto trading clients.
What's also interesting is that Bitcoin accounted for nearly 50% of their cryptocurrency revenue. It's still the king, but it's good to see other assets getting some attention as well. Do you think this will encourage more traditional exchanges to dive into?
Absolutely. The success of Boerse Stuttgart will likely prompt others to follow suit. They're already aiming to partner with more European banks, brokers, and other financial institutions to further expand their crypto offerings. As the infrastructure improves, we can expect more mainstream adoption.
Building on what we discussed earlier about market trends, I'd like to bring up XRP's recent performance. It's experiencing its strongest bullish momentum since January 2018, with futures open interest hitting a record high.
XRP has been on a tear lately, and it's not just the price rise that's impressive. We're seeing record perpetual futures open interest and a surge in trading volumes. According to the RSI oscillator, XRP is chalking out gains at the fastest pace since early 2018.
That's right, and what's even more encouraging is that the funding rates are positive but measured, indicating healthy bullish positioning. It's not just speculation, there's actual substance behind this price movement.
Payments-focused cryptocurrencies like XRP have been gaining traction, and it's likely due to the growing adoption of crypto in traditional finance. As we see more use cases and partnerships emerge, I think we can expect XRP to continue its upward trend.
Speaking of partnerships, do you think XRP's success will lead to more collaborations with financial institutions? We've seen some major players already exploring the use of XRP for cross-border payments.
Definitely. XRP's unique value proposition makes it an attractive option for institutions looking to improve their payment systems. As the crypto landscape continues to evolve, I think we'll see more partnerships and use cases emerge, driving further adoption and growth.
Building on what we discussed earlier about the Web3 landscape, I'd like to dive deeper into a recent interview with Elroy Cho, co-founder of ARK. He shared some fascinating insights on how Asia is approaching Web3 differently.
That's right. Cho's argument is that Asia is uniquely positioned to lead the next phase of NFT innovation. Given the region's massive gaming and tech industry, it's not hard to see why he's optimistic about Asia's potential in Web3.
Exactly. ARK has become a hub for collaboration among the global Asian diaspora, enabling members to connect and work together on various projects. It's interesting to see how Chio and his team are redefining the dynamics of digital communities.
Speaking of communities, I think it's worth noting that the success of projects like ARK relies heavily on the broader market conditions. And what a wild week it's been for crypto. We saw a market-wide plunge on Monday, followed by a massive surge on Wednesday.
That's right. The U.S. inflation report seemed to be the catalyst for the market's turnaround. But one asset that's far outpacing others is XRP. It surged by 19% over the past 24 hours, reaching a current price of $3.18, the highest price seen since 2018.
That's a remarkable jump. XRP's performance is likely linked to the ongoing developments in the Ripple lawsuit. But it's also worth noting that other assets like Dogecoin and Solana have hit weekly highs. It's clear that the market is still highly volatile, but there are opportunities for investors to capitalize on these.
I think it's essential to keep an eye on the broader market trends while also monitoring individual asset performance. As we've seen with XRP, a single asset can quickly surge or plummet, affecting the overall market sentiment.
Absolutely. And that's why it's crucial to stay informed and adapt to changing market conditions. We'll continue to bring you the latest updates and insights on the crypto market, so be sure to stay tuned.
In the meantime, we'd love to hear from our listeners. What are your thoughts on the current market conditions, and which assets do you think have the most potential for growth?
Share your thoughts with us on social media, and we'll discuss them in our next episode.
I have to say, after our discussion on AI's growing presence in the crypto space, I was surprised to see how some of these advanced chatbots fared in a recent chess tournament.
Ah, yes, I saw that article too. International master Levy Rosman decided to pit these AI chatbots against a professional chess engine, and the results were pretty one-sided.
That's right. Despite their impressive capabilities in conversation and coding, these chatbots, including ChatGPT, were demolished by the Stockfish chess engine. It just goes to show that there's still a long way to go in terms of developing AI's critical thinking skills.
Exactly, and I think this highlights the limitations of relying solely on AI for complex decision-making processes, especially when it comes to high-stakes applications like finance and cryptocurrency trading.
Speaking of high-stakes transactions, I saw that U.S. prosecutors are asking a court to greenlight the return of 95000 stolen Bitcoin to Bitfinex. This is related to the 2016 hack, right?
That's correct. The hack resulted in the theft of around 1,200 Bitcoins, and federal prosecutors have been working to recover the stolen funds. It looks like most of the Bitcoin will be returned to Bitfinex, but the remaining 25000 will have to go through a more complex claims process.
I remember we discussed the Bitfinex hack a while back and how it highlighted the need for more robust security measures in the crypto space. It's good to see that some progress is being made in terms of recovering the stolen funds.
Absolutely. And it's also worth noting that the individuals responsible for the hack, Ilya Lichtenstein and his wife Heather Razokhan Morgan, have been brought to justice and are serving prison sentences. This sends a strong message to would-be hackers and launderers that law enforcement is taking these crimes seriously.
Building on what we discussed earlier about the intersection of crypto and AI, I wonder if we'll see more instances of AI being used to prevent or mitigate these types of hacks in the future.
That's a great point. As AI technology continues to evolve, We may see more applications in the realm of cybersecurity, particularly when it comes to detecting and responding to potential threats in real.
Well, it's certainly an area to keep an eye on, and we'll be sure to follow any developments in the space.
Earlier today, we touched on Vitalik Buterin's comments regarding Sony's Ethereum Layer 2 scaling network, Soneium. He pointed out how it showcases the flexibility of Ethereum, allowing businesses to make fine-grained choices about user control.
That's right. It's interesting to see Buterin frame this controversy as a demonstration of Ethereum's strength. By highlighting the ability for businesses to pick and choose their level of control, he's emphasizing the versatility of the platform.
Exactly. And when you pair that with the growing institutional interest in crypto, it's clear that the landscape is shifting. Speaking of which, the recent HashKey survey predicts Bitcoin could reach $300,000 this year, driven by unprecedented institutional capital flows and mainstream financial adoption.
Those numbers are certainly eye-catching. The fact that nearly 500 community members contributed to the survey lends some credibility to the prediction. And with Wall Street giants increasingly committing to crypto, it's not hard to see why HashKey is bullish on Bitcoin's prospects.
One thing that stands out is the intersection of these two stories. On one hand, you have Ethereum's flexibility attracting businesses and institutions. On the other, you have Bitcoin's growing mainstream appeal and potential for massive price appreciation.
It's almost as if the market is maturing and we're seeing a clearer divide between the use cases for different cryptocurrencies. Ethereum is solidifying its position as a go-to platform for businesses and decentralized applications, while Bitcoin is asserting its dominance as a store of value and investment vehicle. And
as we wrap up today's episode, it's worth taking a step back to consider the broader implications. What do these developments mean for the average investor or crypto enthusiast? How can they position themselves to take advantage of the growing institutional interest and potential price appreciation?
For one, it's essential to stay informed and adapt to the changing landscape. As we've seen with Sony's Soneium controversy, the crypto space is still evolving, and businesses are experimenting with different approaches. By staying up to date on the latest developments, investors can make more informed decisions and avoid potential pitfalls.
And what about the market outlook? Are we in for a sustained bull run, or is this just a fleeting moment of optimism?
While it's impossible to predict with certainty, the signs are certainly pointing to a strong year for crypto, with institutional capital flowing in and mainstream adoption on the rise. It's hard to see the market stagnating anytime soon. Of course, there will be ups and downs, but the overall trend seems to be pointing upward.
Well, that's all the time we have for today. Thanks for tuning in, and we'll catch you on the next episode.
Don't forget to follow us on social media for the latest updates, and we'll see you tomorrow.